Welcome to this informative and easy-to-understand video on the systematic trading approach using range bars. In this video, we'll explore how range bars can revolutionize your trading strategy and how they are the only way to trade effectively. Part 1. Range bars, the ultimate tool for trading. What are range bars? Range bars measure precise price movements, point by point, in an exact and structured way. Unlike time-based bars, range bars create a clear and structured chart setup based solely on price movements. By eliminating noise and focusing on systematic price movements, range bars offer a better understanding of raw price action, which is the only thing that truly matters when it comes to effective trading and money management. Advantages of range bars include being price-based and only focusing on raw price movement. Unlike time-based bars that are random and unrelated to market movement, since they're filled with bias and vary in size. As you can see, some are small and some are big. By using range bars, we can enter and exit trades in a structured and organized manner. Range bars have proven to be the most accurate method for trading, especially when tested against 50 years of market data. Our team has over 15+ years experience and 20,000 real-time hours spent in the markets testing live. In that period of time, we've tried every type of strategy, method, market indicator, trading formula, algorithmic trading bot, chart setup, and everything in between that you can possibly imagine. And we discovered that range bars are the simplest and most effective trading chart setup. Range bars are a system we use for order entries and exits in trading. Unlike time-based bars, which can be random and of varying sizes, range bars measure the exact price movement based on specific market points. This creates an accurate pattern-based chart setup, making it easier to understand raw price action based on what truly matters, the price itself. Time is a man-made variable, and its randomness means it has no correlation to market movement. Hence, time-based bars do not reflect actual price movement and can be influenced by news, human variables, and biased ideas, like impulsive trading. The only factor that truly matters in trading is the price. By organizing the chart using range bars, we eliminate noise and can focus on entering and exiting based on systematic price movement. After extensive testing, we found range bars to be the most accurate method for entering and exiting trades in a structured, organized way, which is essential for running a successful trading business. Part 2. Market data and automated trading systems. Understanding market data. Market data represents second-by-second price action across all financial markets. By manually testing market data and creating automated trading systems, we can determine viable and executable trading strategies. Testing your strategy on demo accounts to understand its viability without risking your funds is the most important aspect of building a trading system on live market data. We have mixed and matched countless indicators and rules to develop a pattern-based strategy that can be applied to all markets using the range bars. Market data represents the second-by-second price action across all financial markets. It is the data that prints the chart, and by manually testing this data, we can create automated trading systems. This involves choosing specific entry and exit parameters and carefully counting them up on an Excel file. By doing this and quantifying the stop and target, we eventually develop a pattern of strategy that can be duplicated across all markets. The key is to measure the parameters and assess if the trading strategy is viable and executable. Additionally, we can mix and match indicators, trading variables, and rules in relation to the identified pattern. It's crucial to take into account slippage, fees, and external variables to understand the working mechanism of the strategy when applied to real markets. Once the strategy is created, like the range bar strategy we've developed, it's essential to practice on a demo account. Demo trading provides a basic flow of how the strategy will work in the markets without risking any of your funds, allowing traders to fine-tune their approach and build confidence. What is trading? The financial markets are primarily composed of stocks and indexes. While stocks are the companies that perform on the stock exchange, Indexes like the S&P 500 consist of a basket of the top-performing 500 U.S. company stocks, averaged together to produce a chart that can be used for trading. Beyond that, further derivatives and high-frequency trading markets exist, with trillions of dollars in motion. These trades occur in what's known as black pools and large block orders that are executed by billionaires, banks, or financial firms. Trading is a global phenomenon, with people placing bets and taking trades at high volumes 24/7 across hundreds of different markets. The financial markets are highly regulated, making them one of the most powerful industries in the world. It's important to understand that trading isn't a scam or a Ponzi scheme. Rather, it's a well-structured industry driven by institutional-based financial products and large funds moving massive amounts of money in high-frequency trade block orders across indexes, stocks, commodities, foreign exchange, and now even cryptocurrencies. Part 3. Leverage and money management. The importance of risk management and leverage. In trading, leverage allows traders to amplify their risk and reward ratio with a simple click of a button. By increasing leverage, traders can potentially grow their gains or losses exponentially. However, it's crucial to manage risk based on the trading strategy and define the variables carefully. For instance, our extensive 15-plus years experience has led us to determine that risking less than 1% of our balance per trade is the ideal approach. This way, even if we're trading systematically, we can avoid putting most of our capital at risk, which is something sophisticated traders and billionaire firms must do in order to succeed. It's essential to view trading in terms of percentages, because a 1% risk can represent varying amounts, from a few dollars to potentially a few $billion, depending on the balance size. By organizing our strategy this way, we quickly realize that a balance of $100K or more is the only way to ideally risk a few $100 at a time. Trading systems aren't designed to double or quadruple your money quickly. Instead, they focus on making small, consistent gains over time. By adhering to exact rules and following an exact strategy of entries and exits on a daily basis, traders can operate their trading like a business and scale accordingly by repeating the same steps consistently long-term. Important tips related to risk management and leverage. Leverage allows you to amplify risk and reward ratios, but it should be used wisely to manage potential gains or losses effectively. Risking less than 1% of a balance per trade is ideal to avoid significant capital risks. Treat trading like a business by following exact rules and parameters. Part 4. How we make money. As experienced traders in the industry, we understand what truly works and what doesn't, which is why we follow the money using price action. In trading, the real money comes from commissions generated from trade volume. Every trade activated in the market incurs a price per contract volume, and the larger the trading volume, the more commissions and money can be made. While a trading strategy may produce consistent growth, the significant volume of money comes from the commissions per trade across all exchanges and networks. Our objective is to build a community of consistent and successful traders, and as a side effect, we will collect billions of dollars in commissions volume from all the trading activity. This is the same path that anyone interested in trading can follow to generate substantial revenue and grow their trading business successfully, while also perfecting and learning more about how to build automated trading systems. Quick points about the reality of making money in trading. Although trading gains from working trading strategies consists of billions of dollars in the market, commissions from trading volume are the primary source of income in the trading industry. Successful and large volume traders focus on building a trading community of consistent and profitable traders, generating large commissions volumes that eventually become a large firm. Part 5. Why this is the only thing that works. The truth about working trading systems. With over 15-plus years of experience in the trading markets and extensive testing of market data for over 30,000 real human hours, we've discovered what truly works and what doesn't. The truth is that nothing else works except for the strategy we teach here because we have put in the effort and work required to understand markets deeply. Through manual testing of each individual candle, one by one, and meticulous recording of the results, we have gained an extremely fine-tuned and advanced understanding of how markets move and the prevailing patterns. This level of knowledge is now offered to you for free so that you can understand and run your own trading business with a proven, effective method. It's essential to be cautious of anyone charging money for trading courses or strategies. As if they genuinely work, they should be available for free for anyone to learn and use. Our mission is to equip and empower traders to succeed by providing them with the knowledge and tools to avoid common mistakes and fast-track their trading experience by over 20-plus years. Quick tips about the trading industry. Many trading strategies and systems fail because they lack extensive testing and understanding of market data that requires testing all market data. It takes at least 5 years of market data to verify the viability of a trading system and then testing it across all other markets and time frames to verify if it will withstand the tests of time. We have done this hard work for you so that you don't have to. Consider this catapulting your trading knowledge 20-plus years into the future. Now, Part 6. Why everything else fails. Many trading strategies fail because they are based on limited market data and frequent changes in the approach. We've discovered that verifying the effectiveness of a system requires testing it against at least 5 years of market data across all markets. It takes 1 year to test if the strategy is viable as a pattern, and then 5 years of repetition across all markets to verify if it will truly work. Additionally, manual trading is essential to test the system in real time in relation to trade volume and frequency. It's essential to have an exact blend of rules to ensure the system can withstand the complexities and fluctuations of real markets. Understanding this process sheds light on why many other trading strategies fail to produce consistent results. The systematic setup we teach here has been thoroughly tested and fine-tuned to deliver consistent results over time in an exact flow of maneuvering the markets. Part 7. Debunking myths about trading. Myths and facts. About trading, there are common myths and misconceptions about trading that need to be addressed. One such myth is the idea that traders can quadruple or continuously grow their account quickly. In reality, systematically growing an account in such a manner is not feasible, as it would lead to astronomical returns in a short period, defying the principles of sound financial management. Instead, the key is to find a trading strategy that repeats itself consistently and yields a 1 to 2% risk overall of a market swing. This approach results in a slight edge and a working trading strategy that can be deployed long-term with specific parameters to extract small, consistent gains over time. Larger risks would put capital at equal or greater risk, leading to potential losses. Understanding risk management and adhering to exact system parameters is essential to running a trading business with fewer unpredictable variables and making small, consistent gains. Another myth surrounding trading is that it is a scam or a Ponzi scheme. This misconception often arises from uninformed individuals who have encountered scams or fraud within the trading industry. However, it's crucial to recognize that the financial markets are an integral part of the global economy, driven by institutional-based financial products and large funds handling trillions of dollars. Trading is a legitimate industry, and scams are not representative of the entire market. To ensure that you are not being scammed, follow these 3 simple rules that we have realized after years of being in this industry. Number 1, ensure that the trading strategy or training is available for free, as working systems should be accessible to all. Number 2, avoid strategies that are available for a limited time only, as viable systems should be available always without any time limits. And number 3, verify the track record of the trading system openly, as transparency is crucial to evaluating its effectiveness. Test it long-term over time consistently. Trading myths. Recap. Myth 1. Quadrupling money quickly. Systematically growing an account exponentially is not feasible, and it's essential to maintain a balanced approach with minimal risk. Conservative risk management and consistent small gains are more sustainable strategies for long-term success. Myth 2. Trading as a scam or Ponzi scheme. The trading industry operates on institutional-based financial products created by banks and hedge funds that are moving trillions of dollars a year. Identifying scams involves checking if strategies are available for free, have a track record, and are not a limited time offer or sales tactic. Part 8. The difference between investing and trading. There is one key difference between investing and trading. Investors buy and hold stocks based on a company's performance, while traders can profit from both rising and falling markets by using short sell positions and systematic trading systems that take advantage of both sides of the market. Investing and trading are two distinct approaches to participating in the financial markets. As an investor, you would put your money into the stock of a company at its current value. Your profit or loss would depend on the performance of that company. If the value of the company's stock increases, your investment will also appreciate at the ratio corresponding to the amount you invested. Conversely, if the company's stock value decreases, you would experience losses. On the other hand, trading, specifically high-frequency trading, offers the opportunity to make money in both rising and falling markets. This is achieved by taking short sell positions, where traders bet that the market will go down, allowing them to profit from the difference between the open and closing prices. High-frequency trading opens the door to an array of infinite trading strategies that can be created to profit from the market in a balanced and systematic approach, utilizing both sides of the market. This enables traders to build a large trading business with automated trading systems, while investing remains focused on the performance of a company and is entirely dependent on markets rising. This is what makes the trading aspect of the financial markets much more lucrative and larger in size. Part 9. Understanding the industry and your objective in the trading industry. Major players include large trading exchanges, hedge funds, and companies with trillions in holdings. These large companies use automated and systematic trading systems to collect significant commissions volume and make consistent gains in the market in what's known as black box trading systems and algorithms. We demystify trading algorithms and make them understandable for the average person. Understanding the structure of the financial markets and the global economy is essential for successful trading. The banking system, for example, operates as a pyramid scheme where central banks print money and offer it to prime banks at certain interest rates. These prime banks, in turn, have subsidiaries and other banking institutions that further loan money to large and mid-sized companies and eventually to the average person or business owner. This hierarchical system allows money to trickle down to individuals, like us, who engage in financial markets as standard retail traders or investors. By comprehending this economic structure, traders can leverage strategic trading strategies to lay a strong foundation for future growth and expansion. This knowledge can be the stepping stone to dealing with larger amounts of capital and achieving greater financial success. The financial trading industry boasts prominent players, such as Citadel, Bridgewater Associates, large trading exchanges housing thousands of hedge funds, and colossal corporations like BlackRock with trillions of dollars in holdings. These billion and trillion-dollar entities deploy automated and systematic trading systems similar to the range bars we use for our strategies. By executing precise entries and exits, they efficiently manage large and balanced portfolios while collecting significant commissions due to the vast amount of trades processed and block orders executed using their systems. While they may experience average or below average performance in some years, their revenue remains substantial due to the sheer volume of transactions. Our objective is to educate aspiring traders on how these principles can be applied at a smaller scale, equipping them to run their trading business with confidence and success to grow long-term with an exact structure and foundation to do so. Part 10. Objective of the live script and your objective. Your objective is to run a successful trading business following the systematic approach taught here and educate as many people as possible to do so using the provided information in an organized format. By creating a community of successful traders and generating significant commissions volume, you can achieve long-term success and build a base for your future. The live script and the knowledge presented in these training modules aim to equip you to run your trading business with the same level of success and professionalism as ours. Moreover, we seek to educate others on the benefits of adopting a systematic trading system. By following the script and adhering to the teachings precisely, you will swiftly build a community of successful and long-lasting traders who become professionals in their field, free from the fear of making costly mistakes. As a positive side effect of successfully knowing how to trade safely, you will also learn how to generate massive commissions revenue and trading volume, thus laying the foundation for the sustained growth of your trading business. Do's and don'ts of the script and the information provided. To achieve the best results, it is imperative to follow the script and teachings provided precisely and nothing else. Avoid trying to justify why you might want to change words, tones, or delivery methods. Sticking to the proven method as shown in the live examples is key to success. Many individuals have attempted to modify the script or add their own spin on it, but it ultimately destroys the effectiveness of the system, your growth, and effectiveness on building a knowledgeable trading community. The provided script and strategy have been extensively tested and proven to be the most lucrative and powerful approach to running a successful trading business in all forms. In other words, don't do anything else. By avoiding deviations from the script, you can ensure a seamless and successful experience. Be enthusiastic while delivering the script, as it will captivate your audience and enhance the effectiveness of the message. Follow the live examples provided in the live examples section to mimic and duplicate in this exact format. Remember, you have been given access to an exact framework and set of facts related to trading that need to be eloquently and enthusiastically conveyed to your audience during your live streams. The script is designed to present the information in a structured and engaging manner to facilitate easy understanding and application. Embrace the provided strategy and be consistent in your approach. Deviating from the script or attempting to create your own methods of closing, script speech, or parameters will most likely lead to unfavorable outcomes. So just do what works. To succeed in building a thriving trading community, stick to what works and follow this script and strategy precisely. In conclusion, the information provided in this tutorial covers essential aspects of trading, including range bars, market data, the workings of the financial markets, leverage, money management, and the myths and facts surrounding trading. By understanding and implementing these principles, aspiring traders can set themselves up for success, avoiding common pitfalls and fast-tracking their trading journey. Remember, consistency and adherence to the provided script are key to creating a profitable and sustainable trading business in order to properly convey your message while potentially growing as a professional trader over time.